Anyways, Nick, can you show what does the COT data say about the Dow on the Edgefinder weekly data? Yes, I'm curious about that myself. So let's do that together. So if we go to sentiment and we go to COT data, let's take a look at what the Dow Jones is looking like. So the Dow has slightly more preference to the long side than the short side. So institutional money is leaning bullish on the Dow. But then let's take a look at the latest filing for the Dow. We can see that there was a little bit of selling. So a little bit of selling for the Dow Jones. I like to look at its cousins too. The NASDAQ, a lot of selling there. SPX selling. And by the way, guys, the commitment of traders data came out Friday. What about the Russell? Russell saw mild buying. And this is interesting because, this is why I like to, when I talk about the commitment of traders, I like to look at the latest weekly filing, almost like more importantly than the overall net positioning. Because net positioning would tell you there's, slightly bullish leaning positioning on the indices, except for the SPX. But then take a look at this and you say, well, recent activity on the Dow Jones and the NASDAQ has been more selling pressure. And here we are near all-time highs. I mean, look at the Dow. The Dow Jones is hitting an all-time high if it were to close today. So nice move there. But COT shows some selling pressure. So I'm a little cautious as we see selling pressure coming into these indices on the commitment of traders data. So for me, what that would mean is it's not necessarily outright bearish, but there's some selling going on. So I'd have to wait for at least a pullback. I believe the Dow Jones is still getting a bullish reading. There it is, Dow Jones and DAX. I want to look at the DAX because I've wanted to be a DAX buyer as well. So we see sentiment surveys showing kind of peak optimism. So we have 49.2% in this survey saying they're feeling bullish about the outlook for the stock market. Then you have 29% people saying feeling neutral, and just 21.7%, a record low in recent times, saying they're feeling bearish on the stock market.
Okay.
What are your thoughts on that, James? I mean, when you look at the indices, what are your thoughts on them?
Well, I'm personally bullish. However, I was speaking to a friend of mine that works in a hedge fund in London, and he's currently planning to short the Dow Jones. Apparently,
Really?
he was looking into the PE ratios of all the companies that make up the US 30, and he sees them all as quote unquote too far fetched.
Okay.
And he sees the current move as a bull trap. So that's not my analysis. That's come from a friend of mine, but obviously he's a lot more experienced than me, so it's something I'm taking into consideration. However, it wouldn't stop me potentially going long on the next pullback, if we do get one. So whether that would be into sort of this fib level here, or if it's just into the previous level of structure right there, and then a continuation.
Yeah, I kind of, so I set you up in that situation to give you a bear case at least, but I also too am more on the bullish side, just thinking that, I do think also, even though I am bullish, I think it's also okay to, as you've mentioned, wait for a pullback, look for opportunities in kind of a more healthy correction move. I think that the indices, to me, still look very bullish. It's hard to dispute this is a strong upward trend right now, and trying to call the top of that is really tricky. So if I was to be bearish, just for fun, it would probably have to be after we start to see a serious catalyst. And we've talked about this recently, James, but I think one catalyst that could come into play would be if earnings this season are not impressive off of the big tech names that have gotten us so high. I mean, the reality is that this market has been pumped up so strongly by mega tech earnings. So like your Apples and Microsofts and Metas and Nvidias, these companies that are ginormous, them pumping up the stock market has been the story. So I don't know, maybe that's a catalyst, but trying to call the top on it is tricky. But
yeah, absolutely. Yeah, well, the way these guys work, it's not obviously it's not the same as how you and I would normally place a trade. So they don't put entry here, stop loss there. It's more a case of they would enter one level, then they'd enter again and possibly again and sort of average it down. And then if they're wrong, they'll cut the losses at a very specific amount. So that's one way to look at it, is potentially they could be adding like sort of smaller positions in and sort of hedging it, or hedging their way into it. But yeah, overall for a standard trade, definitely looking to continue the bull run.
Yeah, I'm kind of on the same page. So yeah, really interesting. And yes, that is also another common difference a lot of times with like big firms and institutions. Like they're not necessarily enter here with a stop right below or something like that. They might take more of a position building approach. And if your time frame is long enough and your your position sizing is responsible and your liquidity is large enough, a lot of times that can be a very good way to approach it. I mean, like, for example, I kind of have full willingness here on like TLT, which is US bonds. I took this initial trade with the willingness to maybe build a bigger position, thinking that I think that US Treasury bonds might have a little bit more of a rebound. And so I have been in this trade for a minute. I've been waiting on this one, but you'll see there's not a stop on this trade. This is just a portion of my account that I've dedicated to thinking that interest rate cuts could lead to bonds becoming more attractive. So I've been in this trade for months now. So this is not really a short-term trade. It's more of a position trade. So to each their own.
No, I've got a very similar one. This was actually one of my friend's trades that I was just talking about. He entered into Jet2, and it's a situation of, this is, I've been holding this since the end of April, so it's quite a while really, with no stop loss, no take profit, and just a solid price target. And then if it reaches, I think he said about 1280, then it's just a cutoff point, and that's where we exit.
No, I like that. Yeah. So I think it's the bond world is an interesting one. It's kind of a hedge too. If there was to be a real slow in the economy, stocks, you would see inflation come down a lot, but you would also see growth look really bad if that were to happen. And so TLT and bonds in general would actually look attractive in that environment, I think, unless you get a huge ramp up in inflation. That would be a scenario where TLT looks very stupid of me to buy, but I personally don't think that is likely. I think the likely scenarios that we do see inflation cool with a possibility of the economy slowing more than people think, in which case bonds, in my view, look pretty decent, but we'll see.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Is this the new normal? Is the new normal the other guys having a chance at the plate, other than just technology? Mainly, you've got the Russell up 2%, the Dow Jones up 1%, breaking to new highs. I mean, it's a different story than what we've had, in recent months. In recent months, it's been NASDAQ only, S&P second place, and Dow Jones like slightly red on the day every day. Like it's been a very different story. So what are your thoughts on all this? You have some Russell positions, right, Chris?
I do. Here is a look at the Russell. I might have to restart my platform here, but my Russell is now up. So if you were on the show with us yesterday, my Russell was up around $6,000. Now it's up 20 grand.
Wow.
This thing is just ripping.
Congrats. That's awesome.
It's really spectacular. So I'm just going to take a look at an individual account here with some of the Russells. So the add-on trade that I have, a couple things that are doing really well. So I have let's see here. My January 185, I think I'm going to try to do on this one is I've got an August 200 call to the September 215. I think I'm going to look to, I'm going to have to close this down and restart it. I'm getting some glitchy, but anyway, each individual counts up around $3,000 and hopefully more to go. I want to check on one trade. Maybe log out, just come back in, Nick. The 240 to 245, let me share that chart right here. So IWM. I mean, this is it's not really out of the norm. It's like, look, Tesla did this, Apple did this. I mean, stocks have been doing this, but the fact that we've been waiting, I would say patiently, to see, is the small cap going to actually make a rip this year. I just kept watching this as a potential squeeze trade. We had that big rip from Q4, and the reason I was willing to get in and get somewhat aggressive on the timing of this is Q4 of last year, Russell outperformed everything. Okay.
Absolutely, yeah.
Right now, at the time when this thing's starting to go, it's up 2% versus down versus flat. So I mean, it's clearly on a mission.
You're seeing the Russell and the RSP, Chris. That's the other one I was pointing out just before you joined. The RSP is the equal weighted S&P 500 for those who don't know, and we've got RSP outperformance big time today, 1.10% on the day. Meanwhile, as you mentioned, Chris, SPY, slightly positive, but this is a very new development here recently. The RSP actually leading the charge. And one way I like to break this down, guys, is that if you were to take the 500 stocks that are in the S&P 500 and put equal amounts of money in each one, that is what the RSP does. So the RSP puts equal amounts of money in each stock, whereas the S&P 500, the default way is it actually puts, the heaviest weightings in the biggest companies. So a lot of weight goes into Google, Amazon, Apple, Nvidia, and a lot less. But imagine if you took these same 500 companies and you put the same amount into each one. I know it sounds like a little difference, but it's been a huge one this year where the average company has not been doing particularly well. But the heavyweights, the big ones, have been doing really well. Now we see a rotation, a change in that story has been, now the average company is starting to pick up speed, and it's actually outperforming right now the weighted index. So I don't know, Chris, do you think, if you had to pick a side on that, do you think that is set to continue? Like RSP and Russell, let's say you could only be long one, you had to be long one for the rest of the year. RSP or SPY? What do you think?
RSP or SPY? Actually, can I throw another one in? Look at the IJR.
IJR?
Yep.
Small cap ETF.
S&P small cap.
Okay. Yeah.
So I think that's going to be, so if I'm going to be long one right now, here's why I like IJR and here's why I like IWM. Okay. IJR, to me, it's the measured move, at least to get back to the previous highs. RSP is still sitting at all-time highs. SPY is sitting at all-time highs. QQQ is sitting at all-time highs. Right now, the catch-up trade that I think is pretty attractive is getting back to these all-time highs. So IJR still has, we've ripped about 7.8% in the last week since this rotation happened on Thursday. It's up right around, 7.5, almost 8%. And, what I want to look at is, let's just say from current price to revisit the highs, there's another 5 to 6% right there. Now, that might not sound like a lot, but an index moving 5 to 6% is pretty big, especially doing it in this short amount of time. If you go to the IWR, you and I talked about this well before this move happened. It was just a matter of, if we have confirmation, and I had mentioned this ascending wedge, if we have confirmation of this thing breaking higher, we've got a lot of upside here. There's 20+%. And, with I'd say smart money and this confirmation happening, there is a race to get to those all-time highs. So
yeah, Chris, it looks like that thing might just make a run for it. There's nothing stopping this IWM chart. Another way of looking at it is RTY for those in the audience. RTY is a futures, very clean chart representation of the Russell. And what you can see is, look at this. Just as Chris was pointing out, end of last year, you had a really sweet spot scenario where it was like yields were coming down. They thought they were going to see rate cuts, but the jobs market was rock solid. It was like, oh, Russell to the end. I was bullish during the Russell on the Russell during this time. I am watching and applauding you and Frank for being in this move, but I am not in it myself. My thought was, I'm concerned inflation was staying too sticky for too long, and that growth might get hurt in there. And I think there's still a possibility of that happening, but most likely right now the market is just saying, look, rate cuts are coming. The jobs market's not crashing. There's going to be a growth cycle, and the Russell is back on top. And for me as an onlooker, it's like I'm interested in pullbacks, but I'm also fully aware when this thing makes its moves, it's hard to find pullbacks.
Yep. I mean, at this point, with this type of velocity we're seeing in the last 3-4 days of trading, a flag might be all you get. You might get a bull flag, you might get a pause for a day, but I mean, if I'm looking at my breakout point, I mean, if this comes back to this level in any way, shape, or form, that's a chance to buy it. But just look, there was very little to do here outside of get long and stay long. I mean, I had some debit spreads that were paying pretty nicely. I had some calls that were paying pretty nicely, and I traded it. I mean, and again, structurally, it was at support. This is a pretty easy trade to see, like the Q4 rip, and there was good profits there. But look, I was lucky to make some good profits there. I'm fortunate that I didn't get overly bullish going into this year, because had I been overly bullish, this would have beat up a lot of my long positions. So what I did instead is I opted for, staying out of the way, doing some credit spreads, doing some ratio spreads. And then I have some longer plays. I mean, I essentially did some leaps on the Russell to say, look, I'll give you the year, get to December, get to January, see if this thing wants to go. And so I had those positions waiting with, the intrinsic value that I paid for. But now we're getting the real kind of burst to the upside. And, probably
the one thing I did right with the Russell is through that whole chopping period that you've got on your chart, like 2023, I was selling puts, selling covered calls. I played that sideways market pretty well. What happened was I sold puts into that September, October sell-off that you've got on your screen there, right? The right side of your circle. Big sell-off starts coming in. I get assigned puts. I've got exposure to the Russell, like you're saying. So I was buying in there.
Yep.
Thing is, I sold a call too tight and got out of it way too soon. But can't complain. I sold for some premium in there. On my account, I made some nice positive gains just selling premium on the Russell. But I gotta say, I mean, I think you look back at this time, Chris, in 5 years, and you say, what were we doing? The Russell was so undervalued relative to the S&P 500. I think there's a lot of room for small caps. And I've said that for, my thesis going into the beginning of the year, Chris, was like, Russell is my primary play. And that changed for me too. I think you mentioned, kind of changing thoughts a little bit, changed big time for me. I was like, I don't know. I'm leaning more towards gold because I don't know what's going to happen to the economy now. Right. But I still don't know what's going to happen to the economy. So that's why I'm still got some TLT and gold positioning. Otherwise, I would be fully Russell, so I'm a little bit foot in both camps. But really nice pop for the Russell, and we'll see if it continue. Gold keeps making pushes. We're back up, Chris, to all-time highs for gold. What are your thoughts on this?
Well, I look at this from a wave structure. We could be on the cusp of this wave 5 really getting some traction. So if this is wave 1, 2, 3, a lot of times for wave 4, it's typically a pause. If all this is a pause, then this pause is in, and this breaking to fresh all-time highs means we are going to see wave 5. So, I mean, if we're clearing 2450, 2460, I've got this resistance at 2470. I mean, if we're drifting higher and there's nothing really stopping it, I'm still going to be buying gold on pullbacks. Again, wave 1, 2, 3, 4, if that's all it was, is that little sideways movement for the kind of 1, 2, 3 sideways. And we're going to go wave 5. I mean, the hard part is wave 5. I'd say that's my measured move right around 2,800. But the best thing, and typically what you do, is you're long, and you're just trailing stop losses, and you get a lot of extra upside there, as opposed to trying to choke it off too quickly. I feel very lucky in gold that I removed my caps last week, and I mean, I don't know what the urge was outside of we started to go from these recent lows back up a little bit. And I'm like, what, if we're going to retest these highs, I don't want my calls to get too tight. I don't want my calls to be kind of underwater. And GLD that I own, I mean, I had calls at 230, 250 and 235. And right now, like, those don't seem like they're threatened, but going out maybe another month. I mean, if my expiration was in August or September and all of a sudden gold's up to 231 or 232, all of a sudden my calls are now negative. My calls are capping profit. And so I actually I collected about $1 on my credits, and I closed them for about 45 cents. So I took about 50%, over 50% of the profit on my call, got it out of the way. Now I don't have it covered at all. And I don't intend to have it covered right now, because if this is going to run, I want to stay out of the way.
No, I'm kind of in the same camp. I've thought about that too, Chris. I'm like, okay, we're making a nice move here. Do I, sell a month or two out, call, and just kind of like sit pretty on it? But the thing about gold is it's not, it's such a interesting asset class. It's so unique in the sense that, gold can go 10 years and be the most boring. You might get 2% out of it a year. But then when it makes its moves, it's very much like, this is like the chart of gold over like a long period of time. It's like this, like it is almost like a trend follower's equity over time is like what gold typically does.
Right.
And I think that, when this move is finally happening, which I think we are seeing right now, trying to call that into sight, it just moves so parabolically in one direction when it really wants to make moves. I mean, look at, and it's been a minute, we're a bit overdue in my opinion for a substantial breakout like what we saw. Here's 1977 up through 1980. We saw massive parabolic runs in gold. You saw it in the 2000s into 2011s. And think about this, Chris, during this time, had you bought the S&P 500, you were flat after 10 years. But in gold, you had 600% gains. Obviously, I'm cherry picking the bottom to the top, but the point is, there's these periods where you want to let that gold, monster run take place. And I think that 2020 triggered maybe another cycle for gold.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.